We had economic data today which was off the charts bad for the markets. The unemployment rate went down 0.2%, down to 3.5%, pretty much that worst case scenario. And when we're saying the economic data came in bad, we actually mean it came in really good. The unemployment rate falling, typically a good thing. People getting jobs is typically a good thing. But throughout 2022, we have seen the sentiment flip towards bad news being good and good news being bad. So we got a lot of good news today, which should have been seen as a bad thing for the markets. Now, the markets are ripping due to one key factor. We'll talk about that here in this video, go over everything you need to know about AMC stock and much more, guys. So let's get into this video. Hit that like button and subscribe to the channel if you like these videos or you just like to make some money. So that should be each and every single one of you. Now, let's talk about it, guys. So first things first, we're going to dive in with the economic data, which is really stealing the show here today, causing the S&P and the NASDAQ to go up about 2% at the time of recording this video. So the jobs report, the non-farm payrolls increased 223,000 for the month, above the Dow Jones estimate for 200,000. So that was already above the estimates. Labor market not cooling down, especially not to the degree that the markets want to see. The unemployment rate fell to 3.5%, a decline of 0.2 percentage points, and also better than the estimate. Wage growth was below expectations, with average hourly earnings up 4.6% from a year ago, below the 5% estimate. And that's the key thing. The wages we were expecting to grow 0.3% month over month, or we were expecting 0.4%, excuse me, and the wages grew 0.3%. So a small beat to the wage side of the employment data is causing this huge rally in the markets today. That's why I want to be a little bit careful with the way that I am positioning, because the bad definitely outweighs the good in this scenario, and now the Fed is even that much further to slowing down the labor market. You also seen that the ISM non-manufacturing purchasing managers index showed that the services industry contracted in December, a sign that the Fed rate hikes may be working to slow the economy. Now, this is going to show that services maybe are slowing down a little bit, that maybe the service inflation might slow down. And that's been the big story over the past 4 to 6 months now that investors care about. It's not the good side of inflation. That is already rolled over and continues to roll over. It is the services. It is going to the dentist, going to the doctors, getting your house cleaned. It's babysitters, daycare. It's services that have went up a lot that the Fed really wants to slow down. That and the labor market. You're getting some very unencouraging signs from the labor market today, but you're getting some encouraging signs from the services sector. And we actually didn't get the services inflation reading, so this is actually very surprising that we're seeing a big rally in the markets. Look, I'll take it. My portfolio is up 10.5% just from the start of 2023 already, so I'm not going to be the guy to complain because we're seeing a rally. We've spent the last year positioning for this rally. I hope that we can get a little bit more positioning before the markets take off, right? I think we're far from that point in all reality. We need to get through earnings, and that's going to be the next biggest hurdle to jump over, and the valuation concerns that are definitely still out there in the markets. But nonetheless, today's a positive day, but the economic data was really bad. So you just want to be a little bit careful with some of your positioning. I don't think this is the time to go all in on calls. This is not, the Fed U-turn. This is not anything close to that. In all reality, the Fed is that much further away from their goals of getting the labor market back in line. We did hear from Fed Bostic after this labor report came out, and he said, quote, "We've got to stay the course," adding he expects another quarter or half-point rate hike when the Fed releases its next decision on February 1st. So basically, this isn't even a big deal for the Fed. In all reality, it's exactly, like I said, what they don't want to see. They need the unemployment rate to go up to continue to put pressure on inflation. Now let's get into everything you guys need to know about AMC here on the day. First and foremost, AMC's CEO Adam Aron, Silverback, he says that he will not sell any more stock and that he is AMC's largest retail shareholder. So this is pretty encouraging, right? It's not going to make a big deal in the grand scope of, millions of shares trading hands every day, millions of shares bought and sold every single day, but it's a welcoming sign and does show some level of optimism from the CEO. After all, like it says in this article, he has only sold shares one period ever in 7 years over a 65-day period. That's the only time he has ever sold stock of AMC, and it makes sense, right? Let's not dwell on the past, but he's older. He's 67 years old. Usually that's about the time you start, if not before, diversifying your assets into a more longevity kind of portfolio, right? Where you don't have to work as much if you didn't want to. You divest your assets away from growth. Like a lot of us are in growth right now, but when we're getting 50s, 60s, we're going to want to diversify away from that into more dividends and more structured income in your portfolio. So along with that, that's a positive thing for AMC stock. Now, a lot of things are doing well on the day today. AMC is negative, and I do think this is because of the Bed Bath & Beyond situation that is unfolding, and I guess apparently they're very close to going bankrupt, which is obviously not a good sign. It's not a good sign for the meme stocks. It does put a lot of pressure on them. Now, I will say that sometimes, like we've seen in 2022, we'll see if it holds true in 2023, that when companies announce bankruptcy or like literally go into bankruptcy, that's when a lot of their stocks and their share prices can really start to make a move to the upside. People start to bet that there'll be a way out in bankruptcy court for these companies, and you can get pretty good risk to reward profile. So it wouldn't surprise me to see one of those rallies and to see AMC stock play along. Now that is more for the whims of speculation. That's obviously not the base case. The base case here is AMC will go through another rally. The base case here is that AMC is at its 52-week low that we did set here today at $3.77, jumping up at the time of this recording to about $3.85 per share. So now off of that 52-week low, but still overall it looks to be in a bottoming process. And I did put this downtrending level of support line on, which depending on what day we actually get to it, it's going to be about 361, and I think that's where we could find a lot more major support. So if I was somebody that did not have a position on AMC, and I like the historical performance of buying the stock at a 52-week low, always seeing a gain from there, depending on, what time in history you bought it at, right? Different levels. A lot of the time it's over 100% buying it at the 52-week low to the subsequent high. Usually it takes about a month. Sometimes it's a little bit less. The rally that we did see in November was a little bit less, but still from the 52-week low all the way to the peak, you did see a rally of about 83%. So you're typically rewarded for buying AMC at its 52-week low. And we also know the cost of our rates and the short interest are very, very high, in which we'll talk about right now. AMC short interest continues to go higher here today, up by about 0.83%, now sitting at 21.69%, getting close to that 22% mark, in which that would be a high for 2022 as far as the official short interest reports from the SEC itself. Now, the amount of shares currently sold short almost sits at 112 million, up by almost 1 million here on the day. So we're not looking at small numbers here, guys. These are very high levels of short interest, and this puts the stock really in an interesting situation. If we can get some good news for the stock or get some kind of momentum to the upside going, the risk to reward definitely looks a lot better here rather than at other 52-week low points. For an example, Would you rather have AMC at a 52-week low with 15% short interest, or would you 30% cost to borrow rate, or would you rather have AMC at a 52-week low with almost a 22% short interest and a 268% cost to borrow rate? I think the clear answer there is obviously the latter. Now, let's talk these cost to borrow rates, guys, and what we're currently seeing from Interactive Brokers, who have about 500,000 shares that are currently available to be sold short. Cost to borrow rate sitting at about 98% from Interactive Brokers. Obviously, these different platforms are going to vary their cost to borrow rates, but by and large, they're a lot higher than 98%. Cost to borrow average sitting at 235.21%, cost to borrow max at 268.03%, and cost to borrow minimum at 112%. So these cost to borrow rates, I've said it a million times, sound like a broken record by now. It puts a lot of pressure on hedge funds, not hedge funds that want to take out new positions, more or less. It's putting pressure on hedge funds that already have positions out that have cost of borrow rates that were a lot lower, because these a lot of the time are adjustable, right? We're talking stocks. They can vary in their risk profiles from week to week, from year to year, month to month, or just, you know, minute to minute, depending on what catalysts come out, and that affects cost of borrow rates as well as the demand to borrow AMC stock. And it looks like there is a lot of demand to borrow AMC, but there's also a 500,000 shares that are available to be sold short. So I think the risk profile to an upside move is becoming a lot better, and the market makers, these trading platforms, are seeing that. That's why they are charging higher costs to borrow fees. Now, if we take a look at the option activity, this has been the source spot for AMC for weeks now. Today, you've seen 7 orders totaling $3.51 million, positive order value of 4%. Over the last week, you have seen 116 orders totaling $47.56 million, positive order value of 2%. So we really can't get a break in the options market. The options continue to be ultra bearish on AMC stock, and there's really nothing we can do about that as of right now, guys. If we do take a look at the broad markets, the one thing that I do want to point out is that we are now slightly above the 100-day moving average, and the 50-day moving average did just cross above the 100-day moving average a couple of days ago, and that is a golden cross. So that is technically a technical indicator that is bullish. Now, we need to break out above the 50-day moving average as well to really confirm that this rally might continue. Even though we are going to have CPI next week, we're going to have bank earnings. It's going to be a very big week, and I think that will be more important than the technicals. But as of right now, S&P 500 up 2.03% on a really bad jobs report. So I do think this is overall a positive. I do think the markets want to rally, and I do think you are seeing some end of the year positioning, because after all, 87% of the time when you have a massive down year, you have a positive follow-up year. So statistically speaking, it's more likely that we have a positive 2023 than a negative 2023, and I think people are trying to position for that. But we are above the 100-day moving average as of the time of recording this video, so that is a positive thing. We will remain above the 100-day moving average as long as we close above $385.91 on the S&P 500. So we're pretty firmly above that right now, about $1.04, which this market today has really not seen any major pullback. So if we do see a pullback in the last hour of trading or so, you know, things could definitely change and we could close under that 100-day moving average. But as of right now, it's looking pretty solid, guys. Now, volume is pretty typical. Currently at about 58 million. Roughly what we have seen over the past couple of days and weeks is in between 50, usually 60, 70, 80 million shares trading hands. So by the time the end of the day comes, we're probably going to be in line with the average volume day, in which I don't necessarily think is a positive thing due to the fact that we just got major economic data that the market seemed to take bullish, but in all reality was ultra negative. So there is that. As far as AMC, like I said, watch that 360 level. I think that will be very, very important for the stock, and I think if we do hit those levels, we might see a pretty quick retracement to the upside, guys. All in all, I think the risk to reward profile here looks very good. Buying AMC stock or getting a bullish position via options or via shares on AMC. I'm not a financial advisor. I'm just a guy taking his classes to become a financial advisor. But even then, I cannot give you guys personal financial advice. So there's that. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy the rest of your day, and I will see you in the next one.